Carrie, sorry we got cut off before. You were just about to tell us what you think about the markets right now. Do you think stocks are overvalued here?
Well, that's a good question. But no, it's not fair to say that stocks are overvalued because that word encompasses many, many stocks. Of course, there are some that are and others that aren't. The S&P trades at about 18.3 times next year's earnings. So that's a little bit richer than would be typical over a 20-year period. But that's been true many times in the past.
Sure.
And if you think about, where we've come from, we are 6.5% below the all-time high. We've made a lot of progress, but we're not back to where we were at the beginning of 2022. And right now, we're in this wait-and-see mode where what Jay Powell said was scary to some and comforting to others. And inflation continues to come down. He said as much. It's still happening because all those rate increases are having more of an effect on inflation, and interest rates are probably not going up in the near term. So what we need to see is earnings. Earnings drive the market. And if we see earnings growth in the next quarter and the fourth quarter stronger than expected, I think that the market continue to advance. It can continue to, but that's obviously not true of all stocks. But I don't think that we're worried that there's an imminent collapse that's going to happen. We think that the market is trading at about a level that makes sense.
Okay, then let me ask this. Do you think the drivers of the market will continue to be the same? Is it going to be the big technology stocks? Is it going to be AI?
Well, those are the stocks that obviously have mattered over the last year. We had a real fear about inflation and recession. We haven't had a recession, we've had growth. And the big tech names that suffered last year have had an enormous effect on moving the market higher. Just the top names themselves, that's Apple, Microsoft, Amazon, and Alphabet, account so far for 46% of the gain in the S&P. Those four names alone. They can't carry the market forever, but they really need to do their part. And we think that's probably true because digital advertising suffered last year and it's better right now. The software industry is better because there's more growth in the economy. So we think that if they can come in with numbers as expected and the rest of the market starts to pick up the pace, there's an awful lot of names under the top 496, more or less, right? S&P 500. Those names, industrials, energy's been doing its part. Consumer stocks, if the consumer economy continues to grow, I think that there's hope that we can see broader participation at the rest of the year. We saw the other day that Salesforce reported a quarter that was better than expected. I bring that up because they report a month after most companies. And because they showed that things were getting better, I think that's encouraging. And that's what the market and investors are really looking for, what happens with earnings over the next 6 months.
Carrie, thank you. Thanks for your patience this morning. I'm glad we got everything worked out. Good talking to you.
Thank you, Becky.